Investing is not just about putting your money somewhere and hoping it grows. It requires careful planning
about cryptocurrency all across the world, but in my view, I think it's avoidable for a simple reason: it's not a regulated asset class yet.
Namaste and happy Diwali everyone. On this auspicious occasion, let's talk about a different kind of wealth, financial wealth. Investing your money wisely can brighten your financial future, just like the glow of Diwali lights up our homes. So in this special episode, we will guide you through the process of smart investing this Diwali. I have Gaurav Chaudhary with me. He's a senior journalist and a commentator. Welcome, Gaurav.
Thank you so much, Charu, for having me, and wish you and your family and near and dear ones a very happy Diwali, and also a very happy Diwali to all our listeners and viewers from all across the world.
So first thing first, let's understand the basics of investing. Investing is not just about putting your money somewhere and hoping it grows. It requires careful planning and consideration. So Gaurav, what should be the ideal strategy to invest this Diwali season?
See, Diwali, ideally investing should be delinked and should not follow any kind of a festival calendar. But having said that, Diwali is always a great occasion to start, and it can be a starting point of every year to relook at your investment if you have existing investments. But I think even if you are not a traditional investor, you're not quite savvy with financial investment, I think this Diwali, take a break and start investing in financial instruments. But before that, let me tell you, the key to all of this is planning, and planning works two ways. It cuts both ways. One, you can plan to invest, and one, you can plan to spend wisely. Let me spend just a minute or so on planning to spend wisely. We have seen, and I have seen many people go out and spend a lot of money in Diwali. That's a very good thing. You need to spend because Diwali is India's biggest festival, and you buy goods. But how much of money you're buying through credit cards is something that you need to keenly keep an eye out for, because credit cards are high interest bearing. Just because you need to spend some money and buy goods this Diwali doesn't mean that you are going to indiscriminately flash your credit card and swipe it and buy goods. No. If you are using your credit card to spend to buy goods during this Diwali, please be very sure that you actually settle it as soon as possible. Otherwise, you will be buried under a mount of very, very high interest rates, which then could lead into a spiral of a debt trap. So that is something that you need to keep an eye out for. If you have some existing interest loans which are high interest bearing, maybe you can take a look at paying off this, refinance this at low interest, raising some low interest loans and repaying this, so that your EMIs, the loan and the amount of money that you are spending every month on financing your existing loans comes down. That may not be a bad idea. There are certain investment pitfalls which maybe you have to take a look at, because as you said, this requires a lot of research, and you do not be indiscriminate. Before you commit an investment in any kind of an asset class, maybe it could be a mutual fund, or it could be a systematic investment plan of a mutual fund, it could be a lump sum investment in any of the asset classes, please be very sure of what you are seeking to achieve, because every asset class is actually delivering a different kind of a goal, depending on the time horizon. If it's short term, whether it's long term, or why are you saving that money for? Why are you investing that money for? And how much do you expect the money to multiply? All those need to be written down. If you're looking at, say, investing money for your children's marriage, then probably you might look at investing in gold, because gold is something that you would like to gift it to your children during the marriage. And if it is 10 years away from now, Diwali is a good time to actually start investing gold. But those are matters of detail that you need to draw it up yourself. Unless you do it, you will clearly end up making some mistakes which are avoidable.
So गौरव, इस दिवाली पर अपना फाइनेंशियल पोर्टफोलियो कैसे बनाएं? क्योंकि बहुत सारे ऑप्शंस अवेलेबल हैं, इक्विटी है, डेट ऑप्शंस है, और आपने गोल्ड का जिक्र किया, तो आप क्या एडवाइस करेंगे, कैसे इस दिवाली को खास बनाने के लिए कुछ फाइनेंशियल आइडियाज़ और गिफ्ट्स बताइए?
I would always recommend that, depending on which age you are in, because your risk taking abilities will change depending on your demographic profile. If you're in your early 20s, clearly your risk taking ability is higher, and you have age on your side. So a significant proportion, probably a majority of your investment should be in stocks. And while you are directly trading in stocks is always a good idea, but if you are a new investor, suppose you have never done investment in stock markets before, I would advise that you set aside money for investing mostly in mutual funds. Because what is mutual funds? Mutual funds are funds that pull money from people like you and me, or retail investors, and professional fund managers and their research teams invest in stocks of specific or debt instruments of specific companies. So you get an option of entering the stock market without the knowledge that is actually required, because you don't have the knowledge. So you rather outsource that knowledge to a pool of professional fund managers who is doing that investing on your behalf. There is also bank FD, an all-time evergreen favorite of many, but the returns are far lower, and if you index it with inflation, I think you'll end up getting negative interest rates as of now. But nevertheless, a certain proportion of about 10% of a proportion should be in bank FDs or similar instruments. The reason is these are liquid, almost liquid. So this is something that immediately hedges your risk. The question of money getting negative doesn't arise here because there is no volatility, it's fixed returns. There is also the question of real estate. Now, real estate, you buy a house for two purposes. You buy a house for staying and you buy a house for investing. Depending on what your purpose is, if you're buying a house for staying, then clearly the way you're going to plan that investment or plan that spending is going to be very different from buying a house for investing. If you're buying a house for investing, then you compare whether the same amount of money, if you were to invest in an equity, what would the returns be, depending on what the project is and where location, etc. is, and what are the kind of returns you might expect when you eventually sell off and liquidate that house. Gold, as I said, it should, in my view, it should be about, you should keep gold around 10 to 15% of your portfolio investment, because gold over a 15-year period might not give you a return as high as equities, but it will still be better than FDs. And you know, there's a lot of talk about cryptocurrency all across the world, but in my view, I think it's avoidable for the simple reason it's not a regulated asset class yet. So your money, even if you lose your money, there's no grievance redressal that you have in place yet. It's not regulated by the Reserve Bank of India. It's not regulated by the Securities Exchange Board of India. So in my view, it's avoidable. The choice, of course, is yours. But if I were you, at this point in time in India, I would rather avoid crypto assets as an asset class to invest.
So इस दिवाली को खास बनाइए और अपने इन्वेस्टमेंट पोर्टफोलियो को चमकाइए. Thank you so much, Gaurav.
Thank you so much, Charo.
So this Diwali, let's not light up our homes but also illuminate our financial futures. Happy investing, and may your investments grow as brightly as the Diwali lights. From all of us here, Shubh Deepavali.